All right. Good evening, ladies and gentlemen. This is Clueless 8 Trading. Frank, this is our midweek videocast, strategic webinar broadcast to keep all our members and free trial subscribers focused on what's going on, review a bunch of things we're doing, and of course, the precision forecast, which in most cases are correct in between all the volatility that we have to incur. Full disclosure, this is purely for financial education, not for any solicitation or advice. I thank you all for attending, and I mean that. It is 8:24 p.m. on a somewhat muggy evening here on the waterfront across from New York City, on the Jersey City side. But the dogs didn't mind it too much, so that was fine with me. We go for long walks right after work, and it's always very pleasant. On that note, just a couple of quick reminders like I normally do. Everyone else who has access to the internet can access our YouTube channel at Google. The Clueless 8 Trading on Google or YouTube. Most importantly, these free broadcasts are available to anyone out there, including all members, for free viewing. And anyone who is interested in joining us as a member, and of course, I always ask for referrals because that's how we grow. 95% plus of our members are through referrals, which is a great sign that we have committed and loyal members. And I highly suggest that you all go ahead and spread the word. Most importantly, our Instagram channel, I upload some highlights of what we are doing as much as I can, and it seems to be growing, but we still need to break that barrier of 500 followers where the Facebook algorithms pick us up and show us around all over Instagram with 1 billion followers, and hopefully we get to 1,000 plus followers. We are stuck somewhere around that 300, sub 300 follower level, but certainly go ahead and do what you guys need to do. Pass on the word. It's free, great stuff put on there. It's great for promotional of what we stuff that we do. It is not a real-time conduit for our alerts, as you all know. So that's it. We have Facebook, LinkedIn, and we have Pinterest, but those are updated and uploaded sporadically. It's the Instagram that I really would like to grow. So any help that you guys can provide us, I certainly would appreciate it. On that note, we have a few more people. That's fantastic. We have Lisa. Good evening. We have Sarm. Good evening. I thought I saw House. How's Google?
What's up, buddy? On the shuttle right now.
That's great, sir. So again, I don't want to make your private life public, but it's not just the trades that we do on Google. House has joined Google as an employee, so God bless you. That's fantastic. Make sure you milk as much money as you can from them before they won't fire you, before you quit. We have my good personal friend Oxida, always learning so we have a great crowd. And I'm sure some of the people with Mike Harrington said good insider trading. There's nothing insider about Google. They're as shut as possible. Nobody even knows what the heck's going on from one department to another. That's true of all major tech companies. It's not like some hardcore boiler room in Long Island, New York. No kidding aside. Long Island, New York, and Jericho, New York, just so you guys know, a little bit of facts, and Boca Raton, Florida, and then Colorado. What's the little town in Colorado? I forget. Are basically the penny stock capitals of the world and scam. Watch Wolf on Wall Street. You'll know. Okay. Google and stuff. No insider trading. I'll tell you that. What do you inside trade? We inside trade Google because we know how the charts work, so we do well. So that's what we do. All right. On that note, and the House certainly wouldn't do it because he wouldn't know what the heck he's listening to in the bathroom. And Sundar Pichai and Sergey Brin and all those guys, I'm sure, are not going around talking about what they're doing next, which is trying to beat the European Union socialists. Okay. So Jack has come and left, so that was quick. So let's start. So guys, let's get all this stuff out of the way here. We close this out. Oops. Why is this not closing? Okay. refuse to close. Let's close this out. This will not move. I have no idea why. And let's see here. Wow, this will not move. Let me try this again. I might have to do a Control-Alt-Delete to get this out. Very strange. That's my... Okay. Bear with me 1 second. And it still won't move. So guys, that's it. That's the end of the session. Let's see here. All right, it can always stay there. Let me try to erase that, make sure that I can write on it to explain a few things. And it won't do that either. Okay. That's not good. Bear with me 1 second, guys. Just having a little... got it out. That's technology for you. All right, guys, let's go over a couple of the bigger charts, and we're going to talk some stocks, show you a couple of indicators, and we'll wrap it up. So first and foremost, let's keep this simple. We already know what's going on in the markets, and let's see if I can get that board up again. Yes, I can, because I want to write down a couple of points, which are extremely important to all of you. Stroke color. All right, let's go. So you see my lovely handwriting, which it's not that bad. Market catalysts. Can everyone see the screen? Yes?
Yes, sir.
Okay, very good. So what are the positive catalysts? So these are the positive catalysts. Possible Canada, China, trade deals, or at least talks with China. So that's a positive. Next positive is we got the PPI numbers. If you guys noticed, first thing this morning, moderate. What does that mean? Inflation in check. We don't have full-blown 3% plus producer price index, which is basically the cost of raw materials for companies. So that's good. So that's a positive. What's other positive? Corporate earnings. Overall, very positive. No shooting wars. Oops. No shooting wars anywhere. North Korea, friendly as ever, which is really great. They didn't show any missiles on their last military parade, which is their way of saying, hey, we're going to work with Donald, which I think President Trump did a phenomenal job when he met Kim Il-jung, despite all the criticism he got that he didn't cut a exact deal and stuff. Well, that's not how you deal with third world dictators. You basically just, work with them. That's a very big positive. So no shooting wars, Korea. So those are all positive. What else? Anyone think of any other points that I didn't mention? I'm just giving you the broader points of what the market positives are. The biggest positive, technicals. Am I spell this right? Okay. Technicals. Market breadth, as in advanced decline line, all that good stuff. Tactical indicators. All going in the right direction. For now. Things can change. We know that. Things can change in nanosecond. But that's why you subscribe to my service, because I'm always there to tell you guys when some things are dramatically changing, not just moving around. So these are the positives. Everyone with me so far? Yes?
Yes.
Okay, very good.
Yes.
Okay. So what are the market negatives? I kid around, but it is true, just from a market standpoint. Trump tweets, okay? These create quick flash crashes, which generally have been tactical buying opportunities. Trump tweets regarding China, Canada, Mexico. We have already cut a deal. They're good to go, so we're good with that. And those are the two main ones. Okay. You notice how quiet the Canadian delegation has been? That's great news. No news is good news. That means they're working it through. Don't forget, the Canadians are our second cousins, right? Like I said in my previous videos, they all look like us. They all, they talk a little funny. And they play great hockey. And they got a lot more snow than us. But, they're good people. So we're going to work it out. The farmers are real tough. That's one of the reasons why this stickler of this negotiation on the dairy products. But hey, they're doing what they're doing. So these things are from a market standpoint. Okay, the market standpoint, sudden tweets are very, they create flash crashes, they create volatility, and they create uncertainty. So I just put that in thing. All right. What's the second major market negative? Currency risk. You notice how quiet it's been about the Turkish front? Why isn't the friggin' Turkish Erdogan, who is literally destroying his own economy by being a complete stubborn dictator, but not releasing the pastor? Why didn't he just release the pastor? I'm dead serious. All right, I know a lot about a lot of things. You guys know that, and he should just do it, because he's killing a very vibrant economy in Turkey, which is a which is a powerful economy. A lot of good consumers. We have the NATO base in northern Turkey, in Cherlik, if I'm pronouncing it right. So the military guys between us and Turkey are totally fine. It's the political front that's happening with Erdogan, and then Donald's pissed off about it, obviously, which is causing this thing. So currency risk, emerging markets. And this is serious stuff, because when you get those big risk-off days and then you see the Europeans selling, hitting our markets, and it's incessant, like all day, it's just like Google's down 40 and Booking, which is a Netherlands-based company, Priceline. I don't know why this didn't show up. Okay, there you go. Down like 40 points, and Amazon's falling for no reason, and Netflix, somebody shut the TV off. And this emerging market, I don't know why this happened. I'm just fixing this so it doesn't look like I'm writing Chinese here. Currency. Okay, that's great. So all this emerging market risk, a lot of it has to do with currency, and the emerging market risk is coming from Turkey, Russia, Argentina. You guys should all know this, because this affects our trading on a daily basis. South Africa. And those are the primary countries which are having that. And it's also coming somewhat from China, but China's not really an emerging market. It's really a developed economy. But still, so these things are really important. We don't want blowouts on what do you call the CDOs, the default bond, which are the insurance for high yield bonds, emerging market bonds, CDOs, and stuff like that. Look it up on Investopedia. I don't want to get into it too much. So these are the risks which are really afflicting us. What's the other risk? You hear guys like Ray Dalio basically telling us that the U.S. market is going to crash. I say garbage. President Trump has done a phenomenal job. And I'm an equal opportunity, guy. I'll always support him for what he's doing, and when he's doing some stupid stuff, I'll always say it. That's just the way straightforward guys are. We're New Yorkers, right? So he's doing overall a fantastic job for the business side, and the on Wall Street side is doing great. Yes, the trade stuff, he's playing a hardcore poker game. I don't agree with a whole bunch of stuff. And US, it's going to work out. It's going to work out. And if it doesn't work out, then we're going to fall 2,000 points on the Dow. I'm telling you right now. All right, and of course I'll be there to basically make.
Yes, I do.
Sorry, and you're going to make, and then I'm going to make sure. Oh, my good friend Tom Gans is there. I thought I've swimming the market. I thought I heard his voice, so that's why. So anyway, before
I'm here, Phoenix.
I know. I heard you in the back. I didn't see you there before. So let me continue with my thought. So what's important is all these negative talk, some coming from very, the opposition, whether it be the Democrats or whatever opposition, governmental opposition. That's standard procedure, by the way, in a democracy, just so you guys know that, all right? So you will always have the opposition talking trash. That's just the way it is. They're lost, right? So of course they're going to talk trash. So the bottom line is that they are, they keep on saying the economy's doing this. Oh my God, we have so much debt. We're going to fall apart. Trust me. So political affiliations aside, we are all Americans. We can all have disagreements. And the key part is that the economy is fine. U.S. economy is great. All right, and it's getting better. And that's all that matters. So all the garbage you hear out there is all garbage. So these guys, these hedge fund managers and stuff, and I want to put this through. Those are the negatives. This is the inside story. You guys would love to hear this. Okay, the inside story are that big and small. Why is this happening? Maybe I'm resting my hand on it. Okay. The inside, I know why. Because I was pressing this button. I'm getting used to this little board here. What the? Bear with me 1 second, guys. I gotta get used to this writing pen. Go back to kindergarten. There you go. The inside story is this, all right? Once we know all this stuff, which goes on through my head, you guys can be much better traders. So the inside story is, number one, hedge funds, big and small. What are they doing, guys? Somebody fill in the blanks. Hedge funds, big and small. What's going on with them?
They have a hard time keeping up with the market averages.
How about saying that in simple English, like my good friend Donald would say? They're losing money.
Underperformance.
Underperformance is a mild word. They're losing their shirts, their pants, their pantaloons, their boxers. They're losing money big time. Okay? So what are they doing? It's all tied in. They're trash talking the market. They're talking their book. They're trash talking. And you hear that a lot out there. They're trash talking the market. They're trying to scare people out of the market. It's called on Wall Street, it's called talking your book. Any other business is called talking. It's talking your book. That's why you see some of these bearish analysts. And remember, I'm not a rampant bull. I'm very tactical. You guys know that by now. But they're trash talk. They're talking their book, not your book. They're talking their book, which means they want the market to crash so they can make some money on their shorts. I gotta get used to this pen. I think I figured it out. Okay. Shorts. They're losing money. So bottom line is, so the inside story, and here's the positive part of the inside story, is emerging markets and China markets are down an average of what, you think? And if we're down an average of like that, we'd be in a recession. are roughly average down year to date. How much? The hedge funds on year to date are down by about 9%, while the S&P, I don't have the exact number, is up by double digits. So SPX is up 10% overall. I mean, overall market is, I think, a little less than 10%. I'll give you the correct number in a second. Emerging and China markets are down what? Roughly. What do you guys think?
30%.
Nah, that's a lot. That's pushing it. 1/3 of the value. They're down, but you're close though. They're down anywhere from 15 to 20% plus. That's a lot. Like if we were down 20% from here, on the Dow being up here at 26,000, that means we would be down 5,200 points, right? From 26,000. We have to keep these things in perspective. We'd be, come on. This my $1 calculator. I got to go back to Dollar General and buy another one. So 26,000 minus 5,200, just to get an exact number. If we are at Dow Jones, 26,000. If we were down the 20% that they are, we would be down to 20,800. Ladies and gentlemen, how would you feel the Dow down to 20,800? Nobody is going to feel anything because they'll be so numb. They'll be like, I don't want to ever look at CNBC or Fox Financial News or Bloomberg or Market Watch. Nothing. I mean, there would be a disaster if we're down to 2,800. Donald lose not only the midterm election, the Republicans is like the sweeping loss, but lose the presidency. So that's what's happening in emerging markets. I want everyone to understand that. And then the hardcore bears are saying, no, they're going to be down another 30%. Garbage. In my opinion, select emerging market stocks, some of the ones that we trade around in China, and there's a lot of ETFs which deal with Turkey and Argentina and stuff. And I'm not an Argentinian specialist, by the way, and certainly not in South Africa, other than the fact that I have South African friends and great people, and it's a beautiful country. Aside from that, I think it's not a screaming buy, but I think it's a selective buy. And I'm not running $1 billion fund either, but I have enough knowledge to say that. So when we are looking at distressed buys, what's one of the biggest companies that comes to mind that I recommended today? Come on, guys, wake up, please. Jody, Exita, swimming the market, no one knows.
Apple.
Apple is a distressed buy? What the fuck are you talking about? I'm sorry. That is the stupidest comment I ever heard. So I'll delete it. And I just excuse my French. That's this. Thank you, Mike. Save the day for everybody. Alibaba. And then one of our members mentioned Beta, which is BitAuto. By the way, whoever said Apple, guys, come on, man, wake up. Apple's a distressed buy? Jesus. Sorry about my French. I mean, that was just naturally New York. Like, oh my God. Okay. Yeah, exactly. There are stocks like Meli, which is the Google of Argentina and Brazil. Mercado Libre. I believe it's Argentinian, Brazilian. I can't remember. Biggest, internet company out there. NetEase. We have all made money on this stuff before. Baidu. I haven't looked at it recently. So these are distressed buys, which we can look into. Alibaba being the biggest one because that is the biggest mover. Up a lot today. Wish I'd bought it the day before, but hey, we had enough winners, so we didn't care. So it doesn't matter. I showed the charts. Lots of upside. Lots of upside. Meli, forget about it. It moves 20, 30 points in a day. So these are all emerging markets, right? Primarily Chinese. And China is in a distressed state right now. So unless you believe that these companies, and again, I'm not an expert on every single metrics of Chinese companies, but I've traded all these stocks before, and we have all have. And I personally think that they are worth a look. Because like I always say, doesn't matter what Donald says, they're still talking. We are not going to get into a full-fledged nuclear war, trade war, I mean, with China, where every supply chain is going to be disrupted in the United States, and we are going to hurt, and they're going to hurt real bad. It's not going to happen. Like I said today, if anyone read my comment, President Xi, very smart guy, President Trump likes him too, is folding. It's a poker game. He's saying, all right, let's do it. All right, end of story. So that's what's going on, guys. Oh, the other thing that I noticed today, which I wanted to mention, and you guys can keep an eye on it, you know, is because I keep an eye on a lot of stuff for you guys because that's my job, is HYG and LQD. Many of you know what they are. This is the high yield ETFs. The HYG is the high yield, the iShares high yield bond index, and LQD is the same thing. Okay. Now, why is high yield important? Because high yield is basically lower rated corporate bonds similar proxy for stocks. So in other words, when these things go down, that means like they say, the bond market is basically the iceberg where 3/4 of the credit markets was below the water. So that means stocks are going to fall at some point. So it was good to see that the high yield complex, which is the lower rated bonds, so higher yield, that's what they call high yield, the risk part of the credit market was doing well. That means if they're doing well, that means risk is down and big money is buying it. Does everyone understand that part? Giving you a full-fledged little education here, quick one, all right?
Yes.
Okay,
Yes.
very good. So this was good to see. So the underpinnings of the U.S. Credit markets are still solid. That's what matters. Remember, when back in 2007, 2009, we basically had a close to the mini depression, and the markets collapsed a gazillion points. The high yield market was the first one, which was the canary in the coal mine, and it's come a long way, and it's holding its ground. So that's great. All right, let's move on. And how do I get this little monster out of here? All right, there we go. All right, now let's get into technicals. Everyone good so far? Anyone have any quick questions? No? Okay.
Nope.
All right, bear with me 1 second. Let me just set up something here. Okay, I'm back. So let's first take a look at the front view of what really matters to us, which is the overlying market. These are E-mini futures in real time, which are roughly up a point. Not that it matters. Numericals don't matter. Which I want to remind everyone. Don't just chase prices. Look at the charts while you're looking at prices. I know it's really hard for a lot of people to do because they're just used to just looking at prices up and down without realizing that volatility will skew prices thanks to the algorithmic high-frequency trading black boxes within seconds. Didn't we see that like at least 5 times today? Exactly. All right? So don't just look at prices and just get whipsawed around and sell at the wrong time and buy at the wrong time. Use my charts as strategic tools. Use your own gut feelings, instincts, even though I keep on saying your opinions and my thoughts don't matter. But it's true. But at least, use your own whatever you want to do. After all, the final decision always lies with you. I am happy to report that from what I've seen, and I'm pretty good reader of all my members and traders in general, that many of you are really getting tuned into tactical charts. Charts on your end and tactical charts on my end. And that I am very happy to report for all of your benefit, which means you guys are becoming more mechanical, more robotic, less emotions, and that will only serve you to become better traders. And I try to practice it every single day. So many of you are doing that. I notice. Many of you are still not doing it. Well, that's your fault. I can't help it. And that's why you guys get freaked out and do all kinds of stupid things. And hopefully none of you are doing that. Remember, the two things that people can do. And I got to bring in the board on this before I get into this. You guys don't mind? All to help you guys. And I am bringing the infamous board. I love this board because I can explain things without having to just, oh, now it's a white background. Okay, that's fine. All right. Hopefully I remember my thought. Okay, that's not doing it. I did something wrong. Yes, of course I did something wrong. Stroke color is white. Background color is black. And bingo. So, like they said in all those mafia movies, there are two things, right? Two things. Actually, there are three things. So, first thing is this is for non-chart traders. One, complete insanity in your head, and believe me, I know this, during intraday volatility. Am I right or wrong? If you're not watching the charts.
Absolutely right.
Absolutely. Believe me, I've been there a long time ago. I know it. Now, I'm very rational. Am I like, do I get worried sometimes? Of course I do. It's the market. But complete insanity in your own head during intraday charts for non-chart traders. Number two, you panic, sell. Options, let's say down 60%. So you buy something at 10. They're now down at 4. You're like, oh my God, I can't take it anymore. You're not watching the charts. You sell. Next thing you know, these things shoot up to 8. Happens every day. It happens every day. So you got to watch the charts. You panic sell. Number 3, let's say you like, okay, I'm not going to sell. I'm going to sit there. So you bought those options, one call at 10. I'm just giving you a hypothetical example. They're down to 4. You're doing nothing. You do not dollar cost average. Sorry about this. This is to do with this pen here. So dollar cost average. Let me see if I can write it down. Okay. So instead of, let's say you bought one call at 10, and I'm just giving you a small example. Mostly the calls are between $2 and $4. So one call at 10, you don't buy one at 4 to bring your cost down to 7. Right? Now you have 2 calls at 7. They go to 8. Now you're up $200 instead of down $600. It's a very simple method, by the way. Now, the only way this method works is if you're following the tactical charts that I'm putting across there. And they're not that hard to understand, guys. But you have to look at mine, then you have to look at your own screen. So that's it. So either you panic sell at the wrong times, or you panic buy, or you be like, oh my God, I'm going to buy, it's going higher. So you buy right there. or you do not do anything to cost average and bring your cost down. So when the reversal comes at whether it's 2 o'clock or 3 o'clock or whatever, it happens every day. Overall, as long as the market primary trend is up, this is going to continue to happen. I don't need to prove that to you. You see it every day. So bottom line is, and today was the China news. Boom! Fat green candle. In the meantime, I did say we're going to reset. We got the reset. And then came the big things. Remember, technicals always precede fundamentals. So if you do not act to cost average down, when this thing blows past to $8 or $7 and your cost basis is at 7, you cannot make money because you're still waiting around for the $10 that you paid for it, which might or might not come depending on the charts. Does everyone understand this really simple concept?
Yes.
So what happens
Yes.
is, this is what I see in a lot of traders, and I'm just trying to help, okay? What I see happening with a lot of traders is they'll buy an option. I'm going to move the 10 down to, let's say $4. So this goes to 2. This happens a lot with SPX calls, okay? Like within like a couple of minutes, it goes down to 2. So you're down 50%. So your other old line services will tell you, oh, you're down 50%. You got to get out of Dodge. That's it. Never take a loss. Stupid stuff that you keep on hearing because they are used to the old way of looking at the markets, and the market is not old anymore. It's like somebody using a analog phone, like the Brady Bunch. Like, hi, what was one of the girls in the Brady Bunch? I can't remember the name. Who was the cute one, the blonde one? Martha? Marsha, there you go. You're going to rewatch the Marsha. All right, like, hey, Marsha, using that one clunky phone, and now you're using iPhone 8 or a Samsung, and fancy phone. So what? Is it going to be the same? No. So it's the same thing with trading. There is legacy trading, and there is trading in 2018. So do you want to go this way? No. You want to go this way. This is the trading of the Algo HFT tech black boxes. So we specialize in this. So when they say, oh, you're 50% down, that's it, you're going to sell it out. And then you sell it out, so you take a 50% loss, and then within the next 20 minutes, you see this thing go to 6. I'm not making this up. You guys see this every day almost. So what do? You chase it up and you buy it back at 4, which most traders don't. They're like, oh my God, I just took a 50% haircut on that trade. I'm not going to get back in that trade. In the meantime, they could have tripled their money. In other words, taken a 200% profit if they had bought down here. Or a 100% profit if they had dollar cost average by buying one call at 2. Somebody please mute the mic. One call at 2, so their average cost is 3. This is real kindergarten stuff, guys, okay? And then this thing drifts up to 6. That's what the E-minis do all the time, right? Dragging stocks up and down. And you're up 100%, and you're like, yes, I did it. That yes, I did it is what we call now. We call it the new normal. I don't call it. It is the new normal. So either you adapt to it or you stick to your legacy rules that you learn or listen to from these old-fashioned, old fart traders and trading services. That's serious, okay? Who talk about risk management. Sure, I understand risk management. I do risk management a lot. You know how I do risk management? I sell profit sometimes a little bit too early. That's how I do risk management. Or if the earnings thing doesn't work, I dump it first thing in the morning. So you guys need to change your mental calibration, okay? So you sell it, you have this steadfast rule. I get these questions sometimes. Oh, so do you have a stop limit? How the heck do you have a limit, a stop limit on an option, which moves around 30-40% in a couple of minutes? The best way that you do it is you take your initial position. Let's say you want to buy 4 calls at an average cost of 4. That's $1,600. So you take your initial position, 1 call. Your entry 2 on the pullback is maybe another 1 call. So please, somebody mute the thing. I love dogs, but I don't need them barking behind me when I'm teaching. Please, somebody mute the mic, please. Thanks. So NT3 could be 1 call. And entry 4, as things slide and slip, can be 1 call. So all of a sudden you have 4 calls. So do not go in on your first batch with your entire position. Scale in. This is known as scale in. Now, it always doesn't go down to allow you to come down that low. Sometimes it just shoots up, and you're like, why the heck didn't I buy more? Okay, fine. Take your profits if it shoots up and you're up 100% on it on a big reversal. But these are the ones I like. The initial one that I buy, then I buy a little bit lower, then I buy a little bit lower, and then it goes nuts. Many of you have experienced that. And if you haven't, please experience it. It's a great feeling. Back to charts. Everyone get what I just explained?
Roger that.
Thank you. Thank you. And then practice it. I can explain all day long and teach all day long. You don't practice it like shooting shooting an advanced, controlling a advanced missile system. You can learn all you want, and then you get that out there in the battleground, out there in the South China Seas or in Iraq or whatever, the Middle East. You got to man it. You got to do it. So you got to practice it. All right. So what are we looking at here? Real good stuff overall, because we don't know what's going to happen tomorrow morning. Well, we know what's happening. The stochastics are turning. We talked about it last time. This is exactly what I wanted to see. I am getting it. Is it a surefire guarantee? There are no guarantees. It's a high confidence trade and a low confidence trade. That's the only thing that we can deal with in options trading or in investing. This is becoming a medium confidence trade right now. Once it crosses over both the parameters on the full stochastics, once it crosses over, that's when we get a higher confidence trade. But by the time it does that, we're going to be up very nicely. But once it does cross over, you generally tend to have, based on all, not one, not twice, all, 100% of the time, you get a multi-day rally lasting anywhere from 36 to 72 hours, if not more. So we are not at that zone yet. We're getting there. If we get futures up 6 or 7 points, then this will be crossed over by the time we wake up tomorrow morning. And that's how it works. It's not rocket science. This is the most easiest, simplest way of looking at the underlying indicators, aside from many other indicators that I can show you, and just use the simple one. It's called the KISS principle. Keep it simple, stupid. All right? So that was good. That what we saw. We saw the turn, and this is the daily chart, so it's very important. We didn't get as low as what we got to on the end of June, but then we had a big correction. Now we are getting this correction. Look at my previous charts. I've shown this repeatedly. These are short-term multi-day 1, 2, 3, 4. Yeah, 1, 2, 3, 4, 5. Yeah, roughly about 5-day type of correction. This was a 2-week correction. This was 1, 2, 3. This was 1, 2, 3, 4, 5. It's called day count. So count the number of candles, count the number of days. Now, so this is good. So saying all that, here was your bull flag. We fell out of it. We fell out of it for a reason that we already know, trade tariff issues and all that stuff. Attack on, the stupid senatorial or congressional hearing, grilling all the companies. Google wasn't even there. Facebook and all that stuff. So text got smashed, gave us a beautiful buying opportunities on selective ones. Remember, Netflix has nothing to do with privacy. Go to the note that you like watching Breaking Bad, or you like whatever the shows, a House of Cards, or you like watching Succession, or I don't know. I get mixed up between different few shows that I watch. Who cares? They don't have the internal details, so it's not a privacy issue with Netflix. It is not a privacy issue with Apple. It is not a privacy issue with Tesla. That's more of a mental issue with Elon, right? And we're doing really well with that because we follow our charts. So those are the things. The ones which get hit with the privacy issue that I said before on my post is Facebook, Google. That's why I haven't touched Google in days. Neither Facebook, Twitter. Those are the ones that, go through the privacy issues. So, and they'll probably get some regulation, right or wrong. The government will put their heavy-handed regulations. I don't think so, but that might happen. Anyway, so this is good. And this is good. Turning. So do I think it's going to go to the moon? We're going to go to 2950? It can happen. If it's valid, if the rumor is confirmed that we are actually sitting down with China again, and that the Chinese are going to play homage and come back here again, or Secretary Mnuchin, who is a absolute financial genius, my fellow New Yorker, and other members of the Trump trade team are going to go to China to meet them, you will see the market go up so fast, your head's going to spin. It doesn't matter what happens there. It'll just go up the minute the news comes out that they're going there. So whichever the case, in the meantime, I'm just looking at 2,900. That's only 11 points from here. I'll multiply by 7, which is the conversion between the E-minis or the SPX and the Dow Jones. That's roughly 77 points. We get 77 points in 1 day. What do you mean 1 day? We get that in 1 hour. 77 Dow Jones points. And that brings us to right here. If we want to retest the high is 29.17. So overall, very good. We came down to the standard deviation got way too high. Explained that on my previous videos. I want to get over it again. We came down, retested here, retested the 34. Standard deviation, the distance traveled between the 50, 34 and the 20-day moving average got a little bit stretched. We got overbought. We came back in a nice set of institutional sell-off. You can see these red candles. When you see them that systematic, that's not humans. These are not humans. This is not you guys or me. This systematic margin sellouts, some hedge funds blowing up, and systematic movements are great to buy tactical dips. So we had 1, 2 to a couple of days down. All these lines kept on moving forward. The distance travel from here, which is the overbought condition, standard deviation, please look it up on Investopedia to understand what the standard deviation and what we call reversion to mean. In other words, you're traveling down a road. I've said this many times. Here's your little card. Let me see if I can draw a car from my days when I was like 10 years old. So can I draw a car? I draw a dog. Okay, that's great. So that's a dog car. Okay, so it's moving along, and then all of a sudden it goes way off the road. Well, guess what? It's going to come back on the road. All of a sudden it falls down. Okay, like right here. Boom. Way up. The standard deviation goes negative 5. Just picking a number. Plus 5. That means overbought. OB. And this happens on a shorter term basis every day, right? 15-minute resets. These are known as resets. So it goes up, comes back on the road, because you want to stick on the road. As long as the road is trending higher, the little doggy car, I'm trying to make this into a car, guys, okay, keeps on moving along the road. Every time it deviates, you want to take the profits along the way. Don't get too excited. That's why I say, do not just follow prices. Got to follow the charts, for God's sake. And this indicator will tell you when it gets severely overbought, like it did here. Overbought can stay overbought, but that is a low probability trade. Overboughts generally get reset quickly. The faster it gets reset, i.e. we get 200 or 300 points down in 1 or 2 days, don't panic. Use it as a buying opportunity. That's what tactical traders do. That's how you mentally need to calibrate yourself. So, you get way out of this road, you fall into the ditch, into a mini canyon, you're still alive, you get back there. Now, what happens with a lot of traders? They fall like this. They have no idea what they're doing. They're not watching charts. Their accounts get blown up and they cancel. Their accounts go to zero because they're piled up on this move up like crazy. While I'm telling people to take down profits because we're getting overbought, you know, my charts are extremely precise. They're so freaking precise that sometimes I look at it and believe me, I'm not stroking myself like, oh my God, I'm great. I'm not. But they're so precise, go look at them. Intraday, on a longer term basis, it's freaking scary. If you guys can capture even 50% of those moves, you're sitting pretty. My biggest problem is, personally speaking, I tend to sell a little bit too early, not too early, but earlier than where I, like my old saying goes, I need to believe in my own bullshit because it is way too accurate. And you guys know that because it's all there. Go look at the charts I posted today and what happened during the day. All right, so this is what traders do. Small and big. They get too excited, they get put too much, and then the resets come, they get blown out. They don't have the cash on the side, which they should never have put in a position that big. And they keep on doing that over and over again. Insanity is basically repeating the same old stupid mistakes till you completely are done. Simple. Don't do it. It's like Nike says, just do it. Just don't do it. So this is good. This is good. 2,900 is going to be, it's a headline psychological number. It's around the corner, and it looks like, given the trajectory of the moving averages, looks pretty damn good. Next chart. Any questions on this one? Quick. I don't have all night, please. No?
No questions.
Very good. All right. Give me 1 second, please. Let me set up my other one. Okay, back. So this is your S&P 500. This is not the futures chart. Showing you a broader picture. I keep on going back all the way to, before the massive crash that happened. This was like a mini depression, okay? That had lasted for from the end of January. Before January, everyone was like what I call wave 5. You guys have heard me say that many times. When everyone got super excited, the chat room went like everybody in there. They're like, okay, Amazon's going to like $5,000, all that garbage. And then they all went silent. They all disappeared because a lot of them just blew up. A lot of members just blew up. A lot of them are members. Some of them left. So, point is, calm. Don't get too excited. Don't get too depressed. Just try to stay calm. Practice mental calmness through tactical charts. Demystify the market. That's what I do. I love that term. It just came to me one day. We demystify the market so it's not as mysterious as you all thought. So let's take a look at what's going on. We have a rising wedge. Rising wedge. This we like a lot. Starting to turn. Every time it turns, it generally suggests a reflex rally bounce continuation. Remember, it's a rising wedge. This is a rising wedge. What happens at the top of the rising wedge? Can somebody just say that to me? Explain that to me in simple English, like you were going to like you were going to explain to a 2-year-old kid. Okay,
like a breakout or something.
Okay.
Breakout or a breakdown.
Right. So you gave me the consequence, but what happens? No, that's a correct answer. But you gave me the result. I want to know what happens for on the price action as the rising wedge continues, as you guys can see here. This is very
It goes
important.
flat.
Huh? What happens to the price movements?
It goes flat. It stops moving up and down.
No, they don't go flat. They get narrower and narrower.
Narrower.
Yes, but you're right. You're on the right track. Who's that,
Like
Jack?
into a funnel.
Yes, exactly. No, there's no coils here, MB. Okay. Bottom line is the movements get tighter and tighter. And that's the reason, if you notice, as you've noticed, going all the way back to May, and this is very important for stocks and everything. Okay. A rising wedge, generally speaking, if you listen to my video cast on the new member intro videos, a rising wedge always has a consolidation. That consolidation has happened many times along the way. But overall, when a rising wedge gets that pinched, it means the price movement is getting narrower and narrower, and you want to be basically taking profits because you know. But by the time it gets up here, these stochastics are going to be up here, and it's happened every single time. No reason to reinvent the wheel, ladies and gentlemen. No reason to reinvent the wheel. It's always the same old story. So as it gets narrower and narrower, you want to be a profit taker because us as tactical traders, we are generally buyers of these lower end of the wedges all the way starting here, and we take profits along the way. Because right there, you're going to see a 400-point drop, just like that. Now, that in a bull market is known as what? You guys know this one. What's it known as? Jack, what is this? Come on, guys, if you don't know this.
Full flag.
Thank you. It's a bull flag. It's a bull flag. It's a flag. No, it's not a flag. It's a bull flag. Because there are bear flags too, which fall and go like this, and then they continue downward. That's a bull flag, not just a flag. So a bull flag basically is profit taking, and then the buyers come in like we do, and then boom, it goes up another leg higher. But we're getting up there right now. So let me just show this chart to you, which I've shown a zillion times already. I drew all the consolidation flags. I even wrote it down. Did anyone care to look at them over the last couple of days that I've been showing this chart? I know some of you have, but anyone who hasn't is obviously going to step up and say, oh, I haven't even looked at it. In that case, I'm just going to fire you. Just kidding. You're going to fire yourself because you're going to lose so much money you wouldn't even know how to deal with it. That's why I drew these things. These are falling wedges, triangular consolidation channels, and every single time that this has happened, and these are the three most similar ones. One of my charts, I said pattern symmetry. You broke out. And the breakouts generally happen when everyone just gets really scared. Chat rooms got like nobody in there, which is perfect for me. I have to chat less. I have to answer questions less. Perfect for me. And this is why I draw these patterns. It's a child can read this chart. I mean it with no disrespect for anyone. Every time the stoves turn like this off these levels, this was a big one. Okay? And then it turned. Now remember, the rising wedge is getting tighter and tighter. We're getting closer and closer to the levels that I just said we were going to go to, which is approximately around 29.25. I said 29.25, 20 a couple of weeks ago, and we hit 29.16. You can't get any better than that. So is there a retest possible to the upper end of the wedge? Absolutely. Is it possible that we shoot out? That would only happen if we have some positive developments coming out of China. Otherwise, we're just going to get up to the upper end of the wedge, which is slightly above 2,900. All stocks are looking good and great. And then, bang, we're going to get a fat correction all the way down to 2,800, which means we're going to drop 700 points on the Dow. And you all going to feel that the life is like the market's all over. And we will certainly be short on that move because I've constantly kept on showing that if we drop anywhere below 28.76, or 28.58, the market's going to fall really hard. That's the way machines work. Saying all that, if we do get up at these levels, this thing will certainly get up towards the overbought zones. So, net, coming down to it without getting, sign up for the advanced coaching sessions. I'll teach you everything well beyond this, period. So you can manage your trades a lot better. I'm just giving you the basics here because that's my job to do on these intra-week updates. So bottom line, this is good. Can it suddenly slip and slide? Yes. That's where volatility comes in. One massive tweet at 6 in the morning saying, we're dealing with China, but they're being difficult. Out of Donald tomorrow morning. I hate saying this because most of the times I say it, it happens. And then we will drop so fast, we'll be down like 200 points on the Dow, on the futures, 40 points on the S&P. It's going to be like, oh boy. That's just the nature of the beast. That's the reason why charts are important. So when I'm putting and taking advantage of these pullbacks the first part of the day, which many of you have joined me and taken your own ideas too and worked with it, and buying the tactical lows, they're great. But remember one thing, it's all about technicals. If these lines break, we're going a lot lower. And it's happened before. It's not the first time. So far, what we're seeing, at least going into tonight, we're okay. So everyone understands this chart, right? So far? So we're good. So it's following the same trajectory. If it does, we get up here. Don't get too excited when prices are flying through the roof, and Boeing, which has been a great trade already, is going to be at 365. No reason to get too excited. We just got back to the old all-time highs. Generally, if we get to the old all-time highs, what happens?
Reversal.
Not always. The opposite happens. Everyone thinks it's a reversal. It overshoots. That's just the way it works. Okay. Multiple attempts at on the upper end will cause markets to overshoot because the shorts are like, oh my God, we can't really kill this market. And multiple attempts on the downside will cause the floor to break. That's just the law of nature. That's the way it goes. Overall, the market's in a bull market purely. You don't need me to understand this. Look at the moving averages, all higher. All right, let's move on. Oops, there's only one of my things here. Hold on. There we go. So this is your intraday moves. Very quick, very fast. I monitor it. I keep on posting all day long. And this is what we did today. So this was today. Today was the 12th. Yesterday was 9/11. It was kind of like a weird day for me. Every year it's always like that. I'm a survivor of 9/11. And so I was kind of like, you guys notice, I was kind of like, okay, I was there, but I wasn't really there, okay? Because I spent some time talking to some parents of some few friends who died. It's like a yearly thing, so I talk to them, and all of a sudden my mind just goes somewhere else, all right? It's tough stuff. Anyway, even after all these years, I can't believe it's been that long. So anyway, so back to the game. So this is what happened. Today's the 12th. Oops. Choose the pen color. That's starting midnight, by the way, okay? So not market. So this is what happened. So if you really look at it, lots of volatility. We made some really decent profits, great trades, some long still in place, and some nice setups. But this is the nature of the market just between midnight, past midnight, 12th of September, and to now. So as you can tell, these are not markets that you guys can figure out, or anybody can figure out. I do in a certain way, even though I don't know exactly what the directional bias is short term. I know what the directional bias is intermediate term. I just showed it to you guys. But on the 15-minute intraday charts, this is what we have to deal with, right? Does everyone understand that part? Now, if we scroll back, now this was yesterday. This was the 11th. That's my That's my other computer making the ding dong noise. All right. So September 11th, since 6 a.m. or this is what happened. So all we basically did since that is we created a wide trading range. I did say that we're going to have a reset pullback based on my hourly charts and such that I kept on showing you guys. There we go. So lots of, this is a volatile market, guys, all right? But I can see a pattern, and I know many of you can see a pattern too. And let me get the broad brush, change the pen color to blue. Okay, so this is the pattern that I see, ladies and gentlemen. I thought I changed the color to blue. Okay, well, let me change it. Okay, multiple bottoms. So far, it's still looking like what, guys, ladies and gentlemen? It's looking like lots of inverted head and shoulders, and it's looking like a W, like a big, there you go, right? So best case scenario, we get up to that 2,900 level or so, and that's the best we can do. In the meantime, if things really crap hits the fan and we get a comment from the White House, not necessarily from Donald, that, hey, we're not really, China hasn't really come to the table yet, all that stuff, boom, we'll come down straight here. So be prepared for that. That's the reason why, I'm always alert. Don't go crazy on the SPX buy calls and puts. Trade intraday, take some money off the table, leave a little bit in there if you'd like. The best way to keep some cheap money on the table is through inverted head and shoulder. Yes, you're right. It's not just inverted head and shoulder. It's inverted head and shoulders. It's like a big cup. But yes, primarily inverted head and shoulders with triple bottoms. Thank you. So bottom line is the best way to keep longs on the markets, aside from the hot stocks that we're trading, like Netflix and Tesla. But Tesla, I'm like pretty quick at taking profits at exactly the levels that it hits on my charts, and you guys should do that too. So anyway, aside from that, you can see very clearly this is the pattern, and I just want to show it to you guys. Multiple bottoms. Boom. Never ever short 9/11. Trust me. Never. They will never let the markets crash on 9/11. Never. Okay? It's a national security issue. So it's like Exita said, always learning, it's an inverted head and shoulder. You got multiple heads. You got a left shoulder. And in people who are completely clueless about these patterns, I highly suggest that you go listen to my chart pattern video analysis on YouTube. Go on YouTube and listen to about chart patterns from these guys who have like 1 million hits. I wish I had 1 million hits because this stuff is serious, but I don't teach basics. Because if you don't understand these basic patterns, just don't be an options trader. Trust me. Just don't. Or just buy my stuff blindly and make money. There's two ways to do my service. Either you just buy my stuff blindly and make money, or try to understand a little bit about the charts and make more money. So those are the only two ways you're going to survive here. All right. There's a bunch of traders from years ago who are members who still don't understand my charts, and they still make money because they just blindly buy it. I say buy it here, buy it. I say I'm entry 2 cost averaging, they buy it. And within the same day or the next couple of days, they make money. So they're like, why the heck should I bother trying to even understand the charts when I'm just following his arrows and his thing? I'm like, okay, fine. So that's another way you guys can do it. So that's it. So here's your downtrend line. If we break out, all that put in. So this is pretty good. Let's look at the daily. This is the daily chart. Let's clean this out. This is similar to the one that we saw on the S&P. More defined because each of these lines are very important to me. Why? Because as I have real money on the table, I want to know what that money is going to do. No more mysterious markets. for you guys. Demystify the market. These charts completely demystify the market. I'm going to write that down. And when I'm writing it, please take a good look here what's going on. Okay, I'm done with my writing with my Logitech mouse. So demystify the market. So what these charts are doing, they're showing you every single candle. That candle's good for about 100% on your SPY calls intraday reversal. Can't beat that. This candle's good for 150% on your SPY and SPX calls on the reversal trades. This is a continuation candle. So whatever you left overnight, you basically woke up the next morning, taking out 80 to 90% on your money right at 9:35 a.m. It's not a joke, guys. And we show it every day. So far, this chart is great. This is the acceleration channel. That acceleration channel, basically, we fell out of it on the 4th of September. And I'm going to just still leave it in there, extend it out, because that was an acceleration channel. Is it possible that we get back in the acceleration channel? Who the hell knows? Because if we do, then we're going to 3,000 S&P. That's 700 plus points from where we are right now. Am I going to call that shot? Nope. That's asking a little bit too much. But it's there, right there. Maybe that's for the end of the year. Another 700 points on the Dow. Can very easily happen. Remember what these gurus keep on telling us. First of all, they have no freaking idea what the markets are doing. But then they tell us that if we do get a China deal, we're going to be up 10% on the S&P 500. Well, right there, your 10% is 300 points on the 300 points on your SPX. That's 2,100 points on the Dow. I highly doubt we're going to be up 10% on a China deal, because we are not even down 10% on a non-China deal. So why the heck should we be up 10% on a China deal? We can be up 4% on the S&P. That means the stocks that we trade are going to be up a gazillion points. Does everyone understand what I just said?
Yes.
Yeah.
Yes.
Good. Good.
Yes.
Remember,
Yes.
most of the market is just common sense. Problem is that when people have money in the markets, they lose their common sense. And money management in the markets, and I'll be the first one to say, it's very tough business because of the volatility. But if we keep our common sense, and the only way we can keep our sanity and common sense is through these charts. Without that, you're not going to have any sense. You're going to keep on missing out on fantastic trades over and over and over again. You're going to keep on telling the little voice in your head, oh, there's always a next time. The next time will come and go and you still won't do it. We're all kind of guilty of that. But some of you are way too guilty of that. And it's high time you stop forgiving yourself from the stupidity that you do every day. High time. Because that's a loser's game. A loser likes to make excuses and say, oh, there's always a next time. There is not always a next time. So this is your daily chart, your hourly chart on the SPX, not the E-minis. It's pretty clear what's going on. Lots of little candles back and forth. All we basically did today by 11 o'clock, by 10 o'clock, right there, if you guys can kindly see, right there. I'm going to actually take this right there, okay? All we did by 10 o'clock today is we retested the downtrend line, and then we went up. Was it in a straight line? No. Every hour there was a candle. Remember, it's an hour. It's not daily. It's hourly. I don't know why it reverts back to daily. So every hour, look at the time below. This was 10 o'clock. This was 11 o'clock. 12 o'clock noon. 1 o'clock. It skipped to 2 o'clock and then 4 o'clock, 3 o'clock. So bottom line is that this is what the market did. Nothing wrong. We have a big resistance here looming above us. Markets don't go up in a straight line, up or down. I keep on repeating that. So this is what happened. Overall, it's fine. As a bull will basically say, okay, this is a cup, and this was the handle. So we ended up well. But then we have these big resistances. Will the handle expand before it pulls back? It can certainly pull back. As long as we don't break below the downtrend line of 28.76, we're good to go. You want to be a buyer. It breaks below this, you want to be a seller and a shorter to the next gap fill. That's the reason why this is here. This is a gap fill. Right there. Look very carefully at all these charts. There's a reason why these things are drawn. It's not that hard. That's a gap. That's why it's there. That's why it's in a reddish tinge. All right, next. This is your daily chart, the masterpiece, which this is what keeps you in the game. Like one of our members wrote in a testimonial feedback, appreciate that she wouldn't have made 400% on her trade last month if she didn't stay in the game. And the only reason she stayed in the game is because she was in the right entry points, but she followed the chart. She listened to the commentary. She looked at my daily charts. She started focusing. She stayed in there even though she had a rough afternoon or a day. She didn't panic and sell like most of you do. She stayed in the game and she quadrupled her account overall. And she'll probably quadruple her account again. And she's not the only one. And she probably wasn't even playing with like millions of dollars. It's much easier to quadruple a smaller account than a bigger account. Can somebody tell me why? Please, somebody please tell me why. You guys are all intelligent people. Why is it difficult to quadruple or double or triple a larger account than a smaller account?
More money at risk.
Stress.
Stress of what? If it's a larger account?
Less stress with a smaller account. If you got $1 million on the line instead of 1,000,
who's
you're gonna be a lot less
who
stressed.
the heck is talking about $1 million? Even with a $50,000 account, the type of performance that I show, 300, 400, 500%, you could have 200,000 plus. Don't forget about the $1 million crap. A smaller account with a couple of $1,000 or even a couple of $100, let's say $1,000 or $2,000, can double or triple real fast than a $10,000, $20,000 account. So forget the million talk. So let him put everyone in place here. You just need a basic account to grow it nicely based on the traits that I put across. But the answers are correct. The larger accounts, which don't have to be $1 million. You got $1 million options account, you're going to fry yourself in 3 minutes if you're not following what I'm doing. You're going to lose $500,000 so fast, your head's going to spin and you're going to jump off a window. Trust me when I tell you, if anybody's trading with $1 million options account. Like they say, most people are used to driving a basic car. Nope, very few have ever driven a Koenigsegg or a Pagani Zonda. All right? You get into those cars or a Lamborghini Huracan. You get into those cars, you turn the engine on, the next thing you know, you're wrapped around a nice fat tree. So it's the same thing with trading. The larger the money you're trading with and you don't know what the heck you're doing, you are going to lose that money so fast, you cannot give yourself excuses. First, you got to try with smaller accounts. Let that grow. Get the confidence. Then you increase it. And even when you increase that, you never put all your capital to work. So don't take me the wrong way, Jack. Forget the million. I know you meant it as a figure of speech. But even a high 5-figure account, you'll get screwed so fast, you're going to blame everybody under the sun. First, do it with a smaller amount. Do each trade understand the charts, because even a smaller amount with these type of gains that I show every single day, 100, 200, 300, 400% in varied amount of stocks, whether it be that pot stock Tillery, whether it be Netflix, whether it be Tesla, whether it be so many others, Boeing of all things. So just think, guys, think before you trade, think before you speak. And I'm only here to help. It's never about the it's never about the money. I hear people say, oh, I don't have enough money to trade. That's garbage. You can trade with $300 and make $500, $600, $800 on my lot of trades. You can buy a booking call at 60 cents, that's $60, and sell it at $400. So all that garbage excuse about I don't have that much money, my account's not big enough, it's all garbage. You can refresh your options money every day. You don't need a day trading account. You want to learn all this stuff? Sign up for the ACS sessions and I'll tell you. All right? So all this garbage about I'm too busy, I can't do this, I don't have that much money, it's all garbage. Are you going to lose money along the way? Absolutely. Will you need cash to pull cash from other places at times? Absolutely. All right, let's move on. So, but those are the right answers. Thank you for at least answering. Bottom line is real simple. This is a positive chart. This is looking fantastic. And if it keeps on moving like this, then sometime by the latter part of this week, early next week, we're going to be severely overbought and back to that 29.17 level. This could happen within the next 48 hours going into Friday. This. Either we pull back or we overshoot. Overshoot, we know where we're going, 29.45 on the swing trades. But so far, this is looking good. Markets are very bifurcated, which means they're picking certain sectors to move and certain stocks within that sector to move. And I'm trying to show the ones which are the biggest movers or biggest potential. You have to manage your trades based on the charts. There's nothing I can do when a square goes up one day $4 and the next day it's down $2 for no reason other than just being overbought. Or a Roku that was only up down 18 cents, but up $5 one day, down 2. That's just the way things work. On that note, guys, have a great evening. We'll catch up tomorrow. I hope this was helpful. I'm just here to basically share my experiences in the market. And I'm a straight up guy. The way I look at it, it's the way I say it. God bless you all. Thank you for listening.
So long, Frank.
Thank you.